Hi, I'm Angie, your healthcare guide. Today, we're decoding the alphabet soup of health insurance plans. HMO, PPO, the list goes on. What do these acronyms mean, and how do you choose the right plan for you? I'm going to break it down with real examples, so let's figure this out together. What do these acronyms mean? Let's start with the basics. These are all types of health insurance plans, each with its own rules, costs, and flexibility. Let's break them down. HMO stands for Health Maintenance Organization. It focuses on keeping costs low while limiting you to a specific network of doctors and hospitalists. You'll typically need a primary care provider who acts as your gatekeeper, coordinating your care and giving referrals to see specialists, like a cardiologist or dermatologist. The pros: lower premiums and predictable costs. The cons: less flexibility. And typically, if you go out of network, it's usually not covered unless it's an emergency. Let's take a look at an HMO summary of benefits and coverage from Kaiser. You'll see in the top right corner the plan type HMO. Next, we have PPO, or Preferred Provider Organization. This plan gives you more freedom, typically no referrals needed to see a specialist, and has a larger network of providers. You can also go out of network, but you'll typically pay more. The pros: flexibility to choose your providers. The cons: higher premiums and out-of-pocket costs since you're paying for that extra choice. PPOs are the most popular plan type among U.S. workers and are a staple for large insurers like Blue Cross Blue Shield and Cigna. Here is an SBC from Blue Cross Blue Shield. We see that PPO plan type up in the corners. Our next plan is POS, which stands for Point of Service. It's a hybrid of HMO and PPO. Like an HMO, you'll likely need a primary care provider and typically need referrals for specialists. But like a PPO, you can go out of network for a higher cost. The pros: a balance of cost and flexibility. The cons: referrals can be a hassle, and out-of-network care is pricier, so you'll need to plan ahead. POS plans are less common, but are offered by major insurers to provide a middle ground option. Let's take a look at two different POS plans. One from Aetna that does not require referrals to see a specialist, and the next one from Harvard's Pilgrim that does require referrals to see a specialist. Next, an EPO, or Exclusive Provider Organization. It's similar to a PPO, where referrals are not likely needed, but it has a stricter network. You must stay in network for coverage, except in emergencies. The pros: lower premiums than a PPO, with the freedom to see specialists directly. The cons: no out-of-network coverage, so you'll need to ensure your providers are in the network. EPOs are growing in popularity for their cost savings without the referral hassle, often offered by larger groups. For example, this plan from United Healthcare. Now let's look at an HDHP, or High Deductible Health Plan, sometimes called a Consumer-Driven Health Plan, or CDHP. It has a higher deductible, which means you will pay more out of pocket before your insurance kicks in, say $1,400 or more for an individual. It's often paired with a health savings account, or HSA, where you can save pre-tax money for medical expenses. The pros: lower premiums and tax benefits with an HSA. But the cons are higher upfront costs if you need a lot of care. Now, an HDHP can be paired with a PPO, meaning you could have a PPO plan that is considered a high deductible health plan as well. giving you all the benefits of a PPO plan, but with a higher deductible and HSA. These types of plans are becoming more common due to their lower premiums and HSA benefits, especially for healthy individuals or those planning for future healthcare costs. So, how do they compare? HMOs and POS plans require referrals and typically have smaller networks, while PPOs and EPOs usually don't need referrals. PPOs often have broader networks, while EPOs are stricter. It's a trade-off, though. HMOs and EPOs often have lower premiums, but less flexibility. But our PPOs and POS plans give you more choice but come with higher cost. You have to think about what matters most to you. Let's take a look at some real-life examples. First, we have Alex. He's healthy and needs lower premiums. An HMO or EPO might work best for Alex. Limited networks save money if he rarely sees a doctor. Now, Maria. Maria needs frequent specialist care. So a PPO's larger network with no referral requirement might be a better fit, despite higher costs. And finally, John. He wants to save for future healthcare costs, say a surgery next year or the year after. An HDHP plan with an HSA lets him set aside that money, ideal if he's healthy now, but plans ahead for later. It can be difficult and confusing to know which plan is best. So here are a few tips for choosing. Think about your health needs, budget, and whether or not you prefer specific providers. Some plans are going to have copays for particular providers, and if you know you're going to see them more often, those copays might be better in the long run versus having to pay a coinsurance percentage each time you visit that provider. Make sure to check your SBC or Summary of Benefits and Coverage for details on each plan. That was a quick guide to some different health plan options. I hope this better helps you pick the right one for you. On your healthcare guide, we will keep simplifying healthcare topics just like this. Things like in-network versus out-of-network. What does this really mean? And how do I understand this explanation of benefits? If you have a tricky healthcare topic that you'd like me to cover, leave a comment below. And if you found this video helpful, please like, subscribe, and share. Thanks, and I'll see you on the next one.